As investors and traders, probably one of the most important things is to for people to keep in mind what the overall larger trend is. So for stocks, it sure looks to me like we have entered a bear market, and we're in the process, or we were in the process of a bear market rally, and that rally, by all appearances, appears to have topped, and we're now working our way down, and we should make a lower low. That's what bear markets do. They make a lower low. We're due for some kind of bounce here. And, I'll say this, that governments have a vested interest in fighting bear markets in stocks anyway. Not so much commodities, but in stocks. So this is going to be extremely difficult. There's going to be very convincing rallies. I warned people that this rally was coming, that it would go further than most people expected. It would turn people bullish. They would become convinced that the bear market was over, and it did exactly what I said it was going to do. And it did all that without even being able to recover the 200-day moving average. So the larger trend in stocks, for all appearances, is down. And it looks to me like this 4-year cycle is probably left translated, which means that there is risk that we could break this low from March of 2020. Left translated cycles, not always, but very often they will make a lower low of the same degree cycle. So now let's move over to commodities. All right, so we've got a different a pattern in play in commodities. This was our last 3-year cycle low. This was the previous 3-year cycle low. And you can see that this commodity cycle, this 3-year cycle, has made a higher high. So commodities are not in a bear market. They're clearly in a bull market, and I would strongly suspect a secular bull market, not just a cyclical one. However, the multi-year 3-year cycle has almost certainly topped right here. So commodities are in what I would term a cyclical bear market. So most everything at this point is in at least a cyclical bear market. Now again, that doesn't mean we're not gonna have rallies. There's going to be great pressure for governments and central banks to prop up stock markets, so they're going to be very difficult to trade. There's going to be convincing rallies. There's going to be somewhat successful interventions in stocks, but the general trend is down because we're probably sinking into a recession, and they're not going to be able to. Governments and central banks are not going to be able to stop that by trying to prop up the stock market, and ultimately the recession will take the stock market down. So the trend in stocks, while it's likely to be very choppy and very difficult to trade, is down, and also the trend in commodities is also down. Even though they are in a secular bull market, they are almost certainly in a cyclical bear market as they work their way down into that next 3-year cycle low, which is going to be technically due sometime here in the spring, or maybe even if it lengthens just a little bit in the summer of 2023. So, and again, there's going to be rallies along the way, and I think we're probably due for one right now. We're due for some kind of a rally in the commodity markets. A convincing rally that's going to get everybody, just like it did in stocks, going to get everybody on the long side a bit prematurely, and then we'll probably have another leg down again, like I said, later in the spring. So now let me put the Fibonacci retracements on here, because I think we still have a ways to go before we're going to be completely done with this cyclical bear market in this 3-year cycle in the commodities. All right, so I think I've covered this in some of my previous videos. I usually generally expect at least a minimum 38% retracement, Fibonacci retracement from any declining phase, no matter whether it be daily, intermediate, or multi-year. I usually expect at least that much of a decline before I would try and call a bottom. So the DBC here is an ETF that basically tracks the CRB pretty closely. So while I think we could probably get another bounce and maybe continue this sideways chop, I really don't think that this decline will be over until the commodity complex at least retraces back to the 38% retracement. And at this point, I'm expecting the global economy is going to hit the depths of the next recession sometime in the spring or summer of next year, and that's when the CRB is going to be due to bottom. I think we'll probably get a little bit shortened 4-year cycle in the stock market that'll also bottom in that time frame. And then central banks worldwide are going to panic. They're going to reverse course, stop hiking rates. They're going to start printing again. And then the bull market in commodities will resume and intensify, and we'll probably get a cyclical bull market in stocks as well, at least for a time, until the commodity markets spike too high again and collapse the economy again. So we're probably caught in a vicious cycle of hiking rates, trying to control commodity inflation, causing a recession, panicking, going back to printing, increasing inflation even more, and so on. And so, based on the cycle expectations, I'm going to say spring or summer of next year, we're going to get a bottom in everything. And then we'll get the continuation of the secular bull in commodities and probably a cyclical bull in stocks. But for right now, we need to just be aware that the major trend is down in almost everything, even though we are probably due for some kind of a bounce in most things, and maybe in stocks and also in commodities before we continue these downtrends.